Good evening, everyone. Once again, we've come to another time to solve past exam questions. Today, we're going to solve the Conceptual Framework question. I read it out in a previous video. I'm going to still read it out now, everyone, so that you follow. Once again, we've come to, most of you are preparing for exams. I know you don't have time now, but if you have time, join. Past exam questions. Today, we're a short video, not going to take long. We're going to solve the Conceptual Framework question. Take away anything from you. I read it out to join a previous video, so I'm going to still read it out now. If it's possible, join. If not, you can watch later. You follow once again. Can join now. Most of you are preparing for exams. I know you don't have time now, but if you have time, join. Exam questions. Today will be a short. Welcome all of you. Take long. We're going to solve the Conceptual Framework. We take away anything from you. I read it out to join a previous video. Yep. Don't want any echo. Okay, so I'll read out the question as usual, and then I will solve it. I'll give you the solution. Scenario: Omega PLC is preparing its annual financial statements for the year ended 31st December 2023. The company has the following items under consideration. Inventories expected to be sold in the next year. Long-term receivables due over several years. A legal obligation to pay damages as a result of a pending suit. Revenue from a contract that is partially completed. Events occurring after the reporting date that may affect asset values. Management must decide which items to recognize, how to measure them conceptually, and how to present and disclose them to provide useful information to users of financial statements. Required. Objective and qualitative characteristics of financial reporting. Explain the objective of financial reporting according to IFRS Conceptual Framework. Identify the fundamental and enhancing qualitative characteristics and explain how they guide the preparation of Omega PLC's financial statements. B. Elements of financial statements and recognition. Identify which elements of financial statements the items in the scenario represent: asset, liability, equity, income, expense. Explain recognition criteria for each element in accordance with the Conceptual Framework. C. Measurement concepts and prudence. Discuss the measurement basis that could be used for the items in the scenario, e.g. cost, fair value, present value, and explain how prudence, relevance, and faithful representation influence these choices. D. Presentation and disclosure. Explain how Omega PLC should present the recognized elements in the financial statements. Identify the disclosures that would be necessary to provide users with useful information, including treatment of post-balance sheet events, contingencies, and materiality. This is a question. It's a theory question, so it does not require calculation. I'm also going to show you the answers that you are going to look at and then understand. This is a sub question. Omega PLC year ended at 1st December 2023. Objective and qualitative characteristics. 1. Objective of financial reporting. The primary objective of financial reporting, IFRS Conceptual Framework, is to provide financial information about the reporting entity that is useful to existing and potential investors. lenders, and other creditors in making decisions about providing resources to the entity. How does it apply to Omega PLC? Users need to assess financial position, inventories, long-term receivables, performance, partially completed contracts, and risks lawsuits. These are the scenarios in the question. Helps evaluate the ability of Omega to generate future cash flows. 2. Qualitative characteristics of useful financial information. Fundamental characteristics. Relevance. Information can influence decisions, that's when it is relevant. Predictive and confirmatory value. Also material per entity. Example, disclosure of long-term receivables or lawsuits is relevant for assessing future cash inflows stroke outflows. That's also a scenario in the question. Faithful representation, complete, neutral, and free from error. Example, inventory value reflects true economic benefit. Lawsuit liability is accurately stated. This is what shows that Omega is reporting faithfully or representing faithfully. Enhancing characteristics. Comparability. Users can compare over time or with other entities. Verifiability. Auditors can check supporting evidence. Timeliness. Information provided in time to influence decisions. Understandability. Information is clearly presented. B. That question answered the A question. Those answers answered the A question. B. Elements of financial statements and recognition. Identify elements. So we have item, we have the element. The first one there is inventories. Inventory is an asset. You can include current asset, it's fine. Long-term receivables is an asset, it's also current asset. Legal obligation to pay damages is liability. Revenue from partially completed contract is an income. Expenses related to contract is an expense. Then equity. Equity is a residual interest in net assets. So this is how to identify all the transactions in the scenarios, what they are and what which elements they are in the statement of financial statement. Sorry. Recognition criteria are IFRS Conceptual Framework. Definition. The item must meet the definition of an element, asset, liability, income, expense before it is recognized. If it does not meet any of these definition, it cannot be recognized. Probable future economic benefit or outflow. Inventories, probable inflow from sale. That's an asset. Receivables, probable inflow of cash, also an asset. Lawsuit, probable outflow, liability. Revenue, probable inflow, income. Expenses, outflow, expense. So that's the scenarios and the economic benefits or outflow. Reliable measurement must be measurable with sufficient liability. Must be measurable with sufficient reliability. Sorry. So this is the criteria for recognition. The criteria for recognition, it must meet the definition of an element, asset, liability, income, expenses, expense. It must be able to bring future benefit or outflow. current obligation, future outflow, current resources or resource, future benefits. So we have looked at it. Inventories, it can bring inflow through sales. Receivables can bring inflow through receipt of cash. Lawsuit will lead to outflow through payment. Revenue will lead to inflow through income, and expenses outflow through expense. Then this must be reliably measured before it is recognized. So these are the criteria for recognition. Measurement concepts and prudence. Measurement basis. Item, measurement basis as per conceptual and explanation. Inventories, cost or net realizable value. Provides faithful representation and relevance. Long-term receivables, present value of expected cash inflows. Reflects economic benefits accurately. Legal obligation, best estimate of settlement amount, ensures faithful representation of liability. Revenue from contract, measurement of progress, e.g., percentage completion. Relevance and faithful representation. Okay, so that's that. Now, prudence, relevance, and faithful representation. Prudence, avoid overstating assets or income. Understate if or income. Understate if uncertain. Example, if lawsuit outcome uncertain. Recognize liability only if probable and measurable. So if the outcome of that lawsuit is not measurable, and if it's not that it will happen, then you cannot recognize it because it will be uncertain. Relevance. Choose measurement that influences users' decisions. Example, present value of receivable is more relevant than nominal value. Faithful representation. Accurate, complete, neutral, free from error. Example, inventory reported at net realizable value, if lower than cost, reflects true economic value. Presentation and disclosure. Presentation. Assets and liabilities should be classified into current / non-current assets. Income and expenses should be presented to show performance clearly. That will be in the segment of profit or loss. Liabilities for lawsuit included under provisions if probable and reliably measurable. So this will be included only if it can be reliably measurable and it is probable that it will happen. Revenue from contract disclosed in income statement or notes as partially completed. So this is what is expected of you in that question. I have also tried to make it in a way that it will look a bit advanced, that you have to reason in order. Oh, you can't hear? Is it everybody that cannot hear? Joy Daniel. Hello. I think it has to do with your system because the voice is okay, the volume is fine. Maybe your system or your network is not that good. Check again. Okay, so I think that's exactly the answer to that question. Question answered. Any question? I know that a lot of you are not online. I have very few people online. Is there question that you want to answer? Okay. Okay. Jimbo, you are there. Like I promised, it's not going to take more than 15 minutes, and it's just about 15 minutes and it's over. I hope you guys understood what I taught, how I answered the question. I wish you the best of luck. Starting from tomorrow, you'll start your exams and then end on Friday. Good luck all, and bye for now.